So you usually go to a convenience store for snacks, drinks, maybe a lottery ticket, something like that. In some Circle K stores, you can now get a personal loan alongside your package of beef jerky or whatever it is. This is because of a partnership with a company called iFinance, a fintech that provides loans in lots of different categories. And we're going to talk about that. Its COO and vice president is William Breton, and he joins us today from Quebec City. Hello there.
Hey, Bruce, thank you for having me.
So, a lot of people know what Circle K is. It's a massive convenience store chain. I know this isn't available everywhere yet, but I wanted to talk about it because I think it's really interesting. How does it work?
And that's a question that we get a lot since we announced this partnership. And I think a question we get a lot too is why Circle K more than any other opportunity. So as you mentioned, we established a partnership with them a few months ago. We're starting in Ontario. Why Circle K? I'd say now more than ever, people and everything that we consume are looking for speed, convenience. It has to be quick and easy. And there's also a background in Canada where, there's six major banks that essentially control almost all of the banking industry. And the financial services industry has evolved very slowly over the past 15 years. And I think that's where fintechs through technology are able to offer unique and fast products. And Circle K is known for being fast and easy. It's precisely a convenience store. And why do people buy their milk from Circle K instead of going to the convenience store, the grocery store? It's because it's fast, easy, and convenient. So I think that's what we're trying to do with the financial services industry and the accessibility to money.
Currently, in a convenience store, you can probably use an ATM. Most of them have them. Might be able to buy a gift card for something. What's the client experience for someone who sees the thing on the window that they can get a loan here? Are they walking to the counter, putting a card on the counter, and someone's ringing it in, or how does it work?
So there are advertisements in the store, one being just with the cashier. So there's signage with a QR code. The customer is going to scan the QR code with their smartphone. Once they've done that, they arrive in our secure environment to apply for a loan. So what we ask is for them to submit their basic information to begin with. So name, address, date of birth, and employment information, which, takes about 2 minutes for someone to submit. And in real time, we're able to give them a pre-approval, which means it's only a soft hit, no impact on the credit bureau, but we're able to give them an idea of will they be approved or declined, and what their rate is going to be, and what their maximum amount to borrow is going to be. From there, if the customer likes, the offer that's presented to them, they can move on with a hard credit check. That's where we give the final approval, and they just move on, selecting their first payment date, signing the contract electronically. So someone that's used to using a smartphone, under 10 minutes, the whole process can be done.
So if I were to oversimplify, Circle K doesn't do anything physical. The cashier is not ringing anything in. You could say that the client experience is similar to me taking a photo of a QR code on a bus shelter. Is that fair?
100%, you're right.
Okay. Okay. So listen, we both know that there are pros and cons to making credit available to Canadians. People need it to get their roof repaired. It's not just like gambling; like they actually need it to live their life. There
Yeah.
are also cons, and one of the challenges is increased distribution, increased availability of credit for some consumers is really problematic. How do you walk that line as you think through? I mean, obviously, you want to make money, you want to sell more loans. That's great. But there are some consumers for whom it's actually a bad idea.
Yeah. And I'll actually answer this in two phases. The first one being, I think it's important to do a distinction between payday loans and the installment loans that we're doing. It is not a payday loan. And I think that a lot of these horror stories that we've heard over the past years in the news is with these payday loans at, 100, 200, 300% rates, terms under 90 days. And that's where a lot of borrowers don't know what they're getting into. And there's been a lot of abuse. Now, we have installment loans. Our rates begin at 9.99, and they depend on the risk or the credit risk of the individual. Obviously, like with any lender, everything is disclosed before signing the contract. It's an open loan, repayable at any time without fees or penalties. It can go up to 60 months. So very different than everything you'd find in a payday loan. Now to your
And
question, yeah.
go ahead. Go ahead.
And now to your question in terms of making sure we don't overextend Canadians, that is a concern for us. We think we have a responsibility as a lender to make sure that we don't create that situation. I think that right now it's important to say that in Canada, debt levels have been at record levels. The Canadians in general are struggling financially more than they used to. That's why companies like us exist. Now, how we make sure we don't contribute to overextending the customers is one, obviously, if we're a lender, if we lend money out, the money has to come back if we want to operate and be profitable. So it's not in our best interest to overextend a customer. That's one. Number two is we have automated models through artificial intelligence. We'll look at more than 100 different data points when an application comes in to evaluate the risk, do some debt ratios, and make sure that the payments that we're putting them in, they'll be able to fit that in their budgets and they'll be able to pay. So I'd say it reflects the risk of the individual, but above all, we have a responsibility to make sure they have the ability to pay back.
Consumers are used to a retail experience when it comes to getting a loan, be it at their branch bank or going to an easy financial location or something like that. As you look at the competitive set from the perspective of the client, how would your rates differ if the client, walked across the street and went to another loan provider? Are you higher rate, same as everybody else, or lower?
We did that, obviously, that competitive analysis before launching the program. Our expectation is for our average rate to be lower than what you would find at different competitors that we have, closer to cash advances. I think that's to the fact that within our group we have multiple verticals that we serve. We've been in business for more than 25 years, and we have a lot of data in a lot of industries and across Canada in all different provinces that we believe some competitors don't have, and it's given us that ability to price for risk in a bit more of an aggressive way, which obviously benefits the borrower.
Mm. You said 9 at the low end. At the high end, for someone with compromised credit, are they going to be paying pretty much close to the criminal rate? Like, do you offer loans that are at the high end too?
So the high end, yes, we do. The high end is going to be more like credit cards. So we're talking up to 29.99%. And yeah, that's the spectrum of rates that we have, 9.99 to 29.99.
What should people know about whether it's through Circle K or online or anywhere? What should they know about taking care of their credit score and their financial situation so that they're paying close to the 9? Maybe even they're going to be able to qualify for a bank loan, which is even lower than that.
Yeah. And for all those people that actually have good credit, the smart financial decision is not to come to us. If you're able to get a loan with your banks at a better rate, you should go in that direction. I think the problem we're solving for is two things. We're solving for the speed and convenience, where imagine just getting a $3,000 installment loan with a bank. Like, you'll have to go there, go through it might take, days, many hours for the whole thing to be done. Where with us, it takes 10 minutes and you have, the money in your account the same evening or the next morning. So we're solving for convenience. And I think the other thing we're solving for is all of those individuals that unfortunately do not have good credit. And that's where I think we can come in and solve some problems. I was actually reading a survey that was done in the past months that said now close to 1/2 of Canadians are living paycheck to paycheck, which means that next week, if their pay doesn't come in, there's a problematic financial situation in their life. And these people, they might be going through a divorce, they might be going through disease, they have kids, they need to go to school or do sports, whatever the reason is. We're not there to judge, but that $1,000 to $3,000 might make a difference in their budget, and that's the problem we're trying to solve for them.
When you look at your clients, and I know you won't have perfect data on this, but what would be some examples of what they would use those funds for?
It's usually emergencies. What we're seeing the most or hearing the most, talking to them, it's an event that just occurred, and either it's a bit tight with their bank or it's too long with their bank, but it's usually something that is kind of a one-off, and they need access to capital pretty quickly to fix that issue. And making it, as an installment loan over, let's say, 36 months, fits in their budget, and they're able to pay it back and solve whatever situation they're in.
If they are in a circumstance in which they can't pay that loan back, what happens? What happens at iFinance? Is it the same as what would happen if they had an installment loan at a bank? It goes through collections. You intervene. What happens?
Yeah, so we have our own collections department. We do everything in-house. We obviously always try to work with people. It's not to our advantage to, threaten people or say we're going to sue or whatever practices some other lenders use. We're more in, trying to find solutions to make it fit in their budget. And it might, instead of taking 36 months, it might take you 39 months. Fine, but we'll work with you to make that possible. Obviously, there is unfortunately a few situations that we're never able to get into an agreement with the customer. We loaned out the money, so we need it back. But these are more exceptions, and we always try to work with people.
Really interesting stuff. I'll be wandering by my Circle K to see if your signage is up there. William, thank you for your time today.
Appreciate it, Bruce. Chat
William
soon.
Breton, Vice President and COO at iFinance. He was here to talk about his company's new partnership to bring installment loans to your local convenience store.